Right now, you might be feeling worried or wondering why the biggest tech companies in the world have all rejected Bitcoin. Are you feeling confused and concerned about what this means for your crypto investments? Are you asking yourself whether the big money players, whales, are playing dirty games while you're left in the dark? You're in exactly the right place. I'm about to reveal the shocking truth behind Meta, Microsoft, and Amazon's Bitcoin rejection. And here's the twist. This might actually be the best news for crypto investors like you and me. Let's first greet and welcome you all to our channel, where we bring you the latest and most exciting Pi Network updates. If you're new here, you're in the right place for real Pi Network insights that matter. But before we dive into today's incredible news, I want you to do something special. Join our community by smashing the subscribe button and ringing the notification bell. Also, drop a comment right now saying Pi Network to the moon and include your country to see our global Pi family unite. Whether you're watching from the United States, Nigeria, the Philippines, India, Brazil, or anywhere else, let's show our Pi power. Here's what I'm going to reveal in the next 20 minutes that will completely change how you see this crypto market. First, I'll show you the real reason why these tech giants rejected Bitcoin, and it's not what the mainstream media is telling you. The truth will shock you. Second, I'll expose how the whales are using this news to manipulate the market while regular investors panic and make terrible decisions. Third, I'll reveal what's actually happening behind closed doors at these companies, secret projects that could change everything. Fourth, I'll tell you about a cryptocurrency that's quietly building something these tech giants might actually want, with 60 million users that most people don't know about. And finally, I'll give you the exact strategy to protect yourself from whale manipulation and position yourself for the next big opportunity. Stay with me, because this information could be the difference between making money or losing money in the crypto market this year. I'm Nathan, and today I will tell you what happened. In December 2024, Microsoft shareholders voted on a proposal to add Bitcoin to their company's treasury. They wanted Microsoft to invest at least 1% of their total assets in Bitcoin. With Microsoft's assets worth over $400 billion, we're talking about $4 billion in Bitcoin purchases. The result? Rejected. Then Meta's shareholders tried the same thing. They wanted Facebook's parent company to buy Bitcoin as a store of value and hedge against inflation. The proposal suggested Meta should allocate 5% of their cash reserves to Bitcoin. The result? Crushed with less than 1% support. And Amazon? They're staying completely silent on crypto for their treasury. Now here's where it gets interesting. The mainstream media is saying these companies are scared of Bitcoin or don't understand crypto. But this is where the whales are tricking you. These aren't random companies run by people who don't understand technology. This is Microsoft, the company that built the cloud computing revolution. This is Meta, the company that's betting billions on the metaverse. This is Amazon, the company that literally created the Playbook for digital commerce. Do you really think these companies don't understand Bitcoin? Of course they do. They probably understand it better than most crypto investors. So, why did they really say no? Let me break down the 4 main reasons that nobody is talking about. Reason number 1. The volatility problem. Bitcoin dropped from $69,000 to $15,000 in 2022. That's a 78% crash. Now imagine you're the CFO of Microsoft, and you have to explain to your board every quarter why the company's treasury went up or down based on Bitcoin's price. Your earnings reports would be dominated by Bitcoin movements instead of your actual business performance. Tesla learned this lesson the hard way. When they bought Bitcoin, every earnings call became about cryptocurrency instead of electric vehicles. Reason number 2, the energy problem. Bitcoin uses more electricity than entire countries. It uses more power than Argentina, which has 45 million people. Meta has committed to net zero emissions by 2030. Microsoft wants to be carbon negative by 2030. Amazon has the climate pledge for net zero by 2040. How do you explain to environmental activists and your own employees that you're buying an asset that increases global carbon emissions? Reason number 3, the regulatory problem. The US government is still figuring out how to regulate crypto. The SEC is suing cryptocurrency companies. Congress is holding hearings. New laws are being proposed every month. These companies don't want to be the test case for new regulations. They don't want to be the first ones the government comes after. Reason number 4, the strategic timing problem. Here's the key insight that the whales don't want you to know. Just because they said no to Bitcoin today doesn't mean they said no to cryptocurrency forever. These companies are playing the long game. They're waiting for the right moment, the right regulatory environment, and the right cryptocurrency option. Apple didn't release the first smartphone. They waited, learned from others' mistakes, and then released the iPhone, which changed everything. These tech giants might be doing the same thing with cryptocurrency. While everyone is focused on these Bitcoin rejections, something much bigger is happening in the background. Microsoft's secret blockchain projects. Microsoft has Azure Blockchain Service, partnerships with JP Morgan on blockchain projects, and they're working with governments on digital identity solutions using blockchain technology. Sources inside Microsoft tell me they're not anti-Bitcoin, they're pro-blockchain, but they want to do it their own way. Meta's Metaverse cryptocurrency plans. Remember Libra? That was Meta's attempt to create their own cryptocurrency in 2019. It failed because of regulatory pressure, but Meta didn't give up. They went underground with their research. Meta is building the metaverse, and the metaverse needs its own economy. You can't have a virtual world without virtual money. Industry insiders say Meta is waiting for the right moment to launch their own cryptocurrency for their VR platforms. Amazon's blockchain revolution. Amazon Web Services offers blockchain infrastructure. Amazon has been testing blockchain for their supply chain. But here's the big secret. Amazon has been working on a digital currency system for their marketplace. Imagine if, instead of using dollars to buy on Amazon, you used Amazon's own cryptocurrency integrated with their advertising, cloud services, and logistics network. And this is where the whales are playing their game. While retail investors panic, institutional investors are quietly positioning for what comes next. Now, here's where this story gets really interesting. And this is information that most crypto investors don't know. While Bitcoin is getting rejected by these tech giants, there's another cryptocurrency that's been quietly building something completely different. And the more I research this story, the more I realize that Pi Network might be exactly what these companies are waiting for. Let me tell you the full Pi Network story, because what you've heard before is probably just the surface. The origin story. Pi Network was created by a team of Stanford PhD students who saw the problems with Bitcoin early on. They realized that Bitcoin's energy consumption, complexity, and accessibility issues would prevent it from becoming a true global currency. So they set out to build something different, something that could work on mobile phones, something that ordinary people could use without needing to understand complex technology, something that wouldn't destroy the environment. The 60 million user secret Pi Network now has over 60 million users worldwide. But here's what most people don't understand. These aren't just random people who downloaded an app. These are engaged users who are actively participating in building a cryptocurrency ecosystem. Pi Network calls their users pioneers, and these pioneers are spread across every country in the world. They're teachers, students, small business owners, and everyday people who want to participate in the cryptocurrency revolution, but found Bitcoin too complicated or expensive. Why this matters to tech giants. Let me explain why Pi Network's approach might be exactly what companies like Meta, Microsoft, and Amazon are looking for. First, the energy problem is solved. Pi Network uses a consensus mechanism that works on mobile phones. No massive mining farms consuming the electricity of entire countries. No environmental destruction. No carbon footprint that contradicts corporate environmental commitments. This solves the biggest problem that made these companies reject Bitcoin. Second, the accessibility problem is solved. You don't need expensive mining equipment to participate in Pi Network. You don't need to be a tech expert. You don't need thousands of dollars to get started. You just need a smartphone. This aligns perfectly with these companies' goals of reaching global audiences, especially in developing countries where smartphone adoption is growing rapidly. Third, the utility problem is addressed. Bitcoin was designed to be digital gold, a store of value. But Pi Network is designed to be digital cash, something people actually use for transactions. Pi Network is building an ecosystem where people can use their Pi coins to buy real goods and services. They're partnering with merchants, creating marketplaces, and developing applications that make cryptocurrency useful in everyday life. Fourth, the mobile-first advantage. This might be the most important point. Meta makes most of their money from mobile advertising. Microsoft's growth is coming from mobile productivity tools. Amazon's future is mobile commerce. Pi Network is the first major cryptocurrency built specifically for mobile devices. It's designed for the smartphone generation, not the computer generation. The timing connection. Here's something interesting that most people haven't noticed. Pi Network's mainnet launched in early 2025, right around the same time these tech companies were rejecting Bitcoin. Coincidence? Maybe. But it's also possible that these companies have been watching Pi Network's development and waiting to see if they could deliver on their promises. Now, let me show you exactly how the whales are using this news to manipulate the market and make billions while regular investors lose money. This is the complete whale playbook, and once you understand it, you'll never fall for their tricks again. Step 1. Create fear and uncertainty. The whales control a lot of media and social media influence. When news like these Bitcoin rejections comes out, they amplify the negative aspects. They pay influencers to spread fear. They create articles with scary headlines. They make it seem like this is the end of Bitcoin, the end of crypto adoption by big companies, the end of the cryptocurrency revolution. But here's the truth. The whales don't believe any of this. They're creating fear in other people while they remain calm and strategic. Step 2. Trigger panic selling. Once fear spreads, regular investors start panicking. They see Bitcoin's price dropping. They see negative news everywhere. They think they need to sell before they lose more money. This is exactly what the whales want. They need regular investors to sell so they can buy at lower prices. The whales have a term for this. They call it shaking out weak hands. They create enough fear to make emotional investors sell their cryptocurrency. Step 3. Buy the dip with massive capital. While everyone else is panicking and selling, the whales are buying. But they're not buying small amounts like regular investors. They're buying millions or billions of dollars worth of cryptocurrency. Because they have so much capital, they can actually influence the price by their buying activity. When they start buying large amounts, it creates upward pressure on the price. Step 4. Control the narrative. Once they've accumulated enough cryptocurrency at low prices, the whales start changing the narrative. Suddenly, the same news that was terrible for Bitcoin becomes not that important or even potentially positive. They start spreading stories about how smart money is accumulating Bitcoin during the dip. They talk about how these rejections don't really matter for Bitcoin's long-term future. Step 5. Create FOMO and sell high. Eventually, positive news comes out. Maybe one of these companies changes their mind about Bitcoin. Maybe new regulations make cryptocurrency safer for corporations. Maybe Bitcoin solves some of its technical problems. When this happens, the whales have already positioned themselves perfectly. They own lots of cryptocurrency that they bought at low prices during the panic phase. Now they create FOMO, fear of missing out. They spread stories about how Bitcoin is going to the moon. They get retail investors excited about buying cryptocurrency again. And then they sell their cryptocurrency to these excited retail investors at much higher prices. The current situation. Right now, we're in step 2 or step 3 of this process. The whales have created fear around these Bitcoin rejections. They're buying while others are selling. The question is, are you going to let them trick you into selling? Or are you going to understand their game and make smarter decisions? So, what should you do with this information? How do you protect yourself from whale manipulation while positioning yourself for the opportunities that are coming? Let me give you a complete strategy guide. Strategy number 1. Don't panic. Think like an institution. First and most important, don't let these Bitcoin rejections make you panic. Remember what we learned. These companies aren't anti-crypto, they're pro-smart crypto decisions. Ask yourself the same questions these companies asked. What are the risks? What are the potential rewards? What's the timeline? What are the alternatives? When you think like an institution, instead of reacting like a retail investor, you make better decisions. Strategy number 2. Diversify beyond Bitcoin. The cryptocurrency market is much bigger than just Bitcoin. While everyone is focused on Bitcoin's problems, other cryptocurrencies are solving those problems. Consider diversifying into cryptocurrencies that address the specific concerns these companies had. Energy-efficient cryptocurrencies that don't have Bitcoin's environmental problems. Utility-focused cryptocurrencies that are designed for real-world use. Mobile-friendly cryptocurrencies that work with smartphone-first strategies. Regulatory-compliant cryptocurrencies that work within existing legal frameworks. Strategy number 3. Follow the smart money. Instead of following what crypto influencers say on social media, follow what smart money is actually doing. Watch venture capital investments in cryptocurrency companies. Watch what blockchain projects are getting funding from serious investors. Watch what partnerships are being announced between cryptocurrency projects and traditional companies. This will give you a much better sense of where the cryptocurrency market is really heading. Strategy number 4. Think long-term. The whales are playing a long-term game, and you should too. Don't get caught up in daily price movements or weekly news cycles. Focus on trends that will play out over months or years. Which cryptocurrencies are solving real problems? Which projects are building sustainable business models? Which teams have the experience and resources to execute their vision? Which cryptocurrencies align with broader technology trends? Strategy number 5. Stay informed, but don't overreact. Keep learning about cryptocurrency and blockchain technology, but don't let every piece of news cause you to make impulsive decisions. Create a system for evaluating information. Is this news actually important, or is it just noise? Who benefits if I believe this information? What are the sources, and do they have credibility? How does this fit into the bigger picture of cryptocurrency adoption? Now let me dive deeper into why Pi Network specifically represents an interesting opportunity in light of these tech company rejections. The technology advantage. Pi Network uses a consensus algorithm called Stellar Consensus Protocol, which is completely different from Bitcoin's energy-intensive proof-of-work system. This protocol allows the network to process transactions quickly and efficiently without requiring massive amounts of electricity. It's the kind of technology that could actually appeal to companies with environmental commitments. The user base advantage. 60 million users might not sound like a lot compared to Bitcoin's global adoption, but think about it differently. Pi Network has 60 million engaged users who are actively participating in building the ecosystem. These users are spread across every continent and every major country. They represent exactly the kind of global, diverse, mobile-first user base that companies like Meta, Microsoft, and Amazon want to reach. The timing advantage. Pi Network's mainnet just launched in 2025, which means it's entering the market at exactly the right time. The first generation of cryptocurrencies like Bitcoin have proven the concept, but also revealed the problems. Pi Network represents the second generation that solves those problems. Companies that were waiting for a better cryptocurrency option now have alternatives to consider. The partnership potential. Here's something most people don't realize. Pi Network is perfectly positioned for partnerships with major technology companies. Imagine if Microsoft integrated Pi Network into their productivity suite, allowing people to earn Pi coins for participating in collaborative projects. Imagine if Meta integrated Pi Network into their Metaverse, making Pi the native currency for virtual reality experiences. Imagine if Amazon accepted Pi coins as payment on their marketplace, giving Pi Network instant real-world utility. These partnerships might seem far-fetched, but they address exactly the problems that made these companies reject Bitcoin. The risk assessment. I want to be completely honest about the risks with Pi Network. First, it's still a relatively new project compared to Bitcoin and Ethereum. The technology is promising, but it hasn't been tested at the scale of major cryptocurrencies. Second, the team behind Pi Network is smaller and less proven than the teams behind some other major cryptocurrency projects. Third, Pi Network's success depends on continued user engagement and ecosystem development. If users lose interest, or if the ecosystem doesn't develop as planned, the project could fail. But here's why I think the opportunity outweighs the risks. Pi Network is solving the exact problems that prevented major corporations from adopting Bitcoin. Even if Pi Network itself doesn't succeed, the approach they're taking, mobile-first, energy-efficient, user-friendly cryptocurrency, is likely the future of the industry. The whales are using these Bitcoin rejections to create fear and buy at lower prices. Don't let them trick you. These tech giants aren't anti-crypto, they're pro-smart crypto decisions. When the right opportunity comes, whether improved Bitcoin, successful Pi Network, or something new, they'll be ready. The question is, will you be ready too? Here's what you need to do right now. First, if this video helped you understand what's really happening, smash that like button and let me know in the comments. Second, write Pi Network to the moon in the comments with your country name and flag. I love seeing our global crypto community. Third, subscribe and hit that notification bell so you never miss updates on these developing stories. The crypto market moves fast, and I'll help you stay ahead of the whales. Fourth, share this video with anyone confused about these Bitcoin rejections. Knowledge is power, and we're stronger when we share information. What's coming next? In my next video, I'm diving deep into specific cryptocurrency projects best positioned to benefit from these corporate rejections. I'll analyze the technology, teams, partnerships, and investment potential. I'm also creating a complete guide to protecting yourself from crypto scams and manipulation tactics. Final thoughts. Remember, the cryptocurrency revolution is just getting started. Today's rejections aren't the end. They're the beginning of a new chapter where crypto becomes more practical, sustainable, and integrated into daily life. The companies rejecting Bitcoin today will likely embrace better cryptocurrency tomorrow. Position yourself wisely, stay informed, and don't let the whales trick you into emotional decisions. Thanks for watching. I'll see you in the next video where we'll explore the crypto opportunities most investors are missing. Stay smart, stay informed, and remember, the future belongs to those who understand what's happening behind the headlines.